Go over to your 4-hour time frame, position yourself properly, and identify the recent swing high and swing low sweep of liquidity. Now, this is the recent high here that was swept, and this is the recent low that was swept. Now, the next thing you want to do is look for a continuation pattern back to this range right here. So this is going to be our range high, and this is going to be our range low. Now, we want to practically go back to the 15 minutes and see what we have. Do we have any continuation pattern? I don't think so. We don't have a continuation pattern yet, because we are all trying to buy this market back to the range high. All right, back to the range high right there. So what we look for now is to ensure that we have a valid continuation pattern. This could be a bullish pennant, a bullish flag pattern, an inverse head and shoulders, but practically a continuation. Now, why are we actually trading a continuation? It is because we want to sweep the high that has been swept before. Now let's go back to the 4 hours again. We want to sweep this high again or break structure, which is this high. This high here. We want to sweep it or break structure. So we need price to rally from here back to this point. Now don't forget that liquidity is the fuel of the market. So for the market to move, it's going to take buyers and sellers from both ends. All right, it's going to take buyers and sellers from both ends. So basically, that is what we need to do. Now, let's check the 15 minutes and see if we have that continuation pattern we're looking for. I haven't seen any yet, but I can see that there's a range here. So if price breaks out of this range, we should be thinking of practically buying from here. If price breaks out of this range. Now let's go over to the 5 minutes time frame now and see what exactly is going on. From the 5 minutes time frame, we already have a range bound set right in front of us, and it's very, very easy to identify that this is looking like an inverse head and shoulders that wants to break to the upside. So eventually, if this breaks out, we simply just buy, put our stop loss below this swing point here. Just put our stop loss below this point here if we eventually break out. But if we do not break out, it means we are actually what? Going back to sweep the low that has been swept before. Now let me show you the low, which is this. This low wants to be swept. If we get a rejection from here, let's say a continuation pattern that failed, definitely we're actually coming back again to this range to sweep this point here. All right, basically this is how to trade. This is how to trade profitably. If you're not trading like this, I really don't know what you are doing with your time, but trust me, this is the only way to trade the market and make good profit from futures trading on Bybit. All right, this is the only way to do that and to do it effectively well. Let's go back to the 15 minutes again and observe what we are seeing. Now, we're anticipating a breakout from this range, whether it's a spring or manipulation that occurs first, but we're actually waiting for a breakout. The moment we see a breakout, boom, we start buying and we take price to the next high and sweep liquidity from there. So guys, basically this is how to get your 1-to-5, 1-to-6, 1-to-7 risk to reward ratio on every single trade on Bybit futures trading. All right, now it's very easy, it's very simple. Go ahead and backtest this on your own so that you can see the magic for yourself. I'll see you in the next video.